Hello traders, you're welcome back to the Forex Geek channel. Have you ever entered a trade based on a trend signal only to see the market reverse against you immediately? Well, that is because of false signals. And in this video, I'm just going to be introducing a powerful tool to help you filter them out. Okay, we're going to be analyzing the regularized moving average oscillator. All right, we're going to be analyzing the regularized moving average oscillator. Okay, so this indicator is designed to reduce market noise, allowing traders to spot real trends while ignoring false breakouts. So now, if you have ever struggled with choppy price action, this video is for you. Okay, false signals lead to bad entries, yeah, unnecessary stop losses also, and overall frustration. The market is full of minor fluctuations, right? And many traditional indicators generate signals based on temporary price movement rather than true trend detection. Now, with respect to false breakouts, price moves above resistance. For a false breakout, you might notice price move above a resistance briefly, right? Move above a resistance briefly or below a support and then suddenly reverses, right? And then concerning lagging indicators, traditional moving averages react too late, causing bad trades or bad entries, right? And then when you have a choppy market, indicators trigger multiple conflicting signals, creating confusion. So to avoid these issues, we need a better filtering mechanism, and that is where the regularized moving average oscillator comes in. Now, you might be wondering, how does the regularized moving average oscillator work? Well, this oscillator is more advanced than traditional moving averages because it smooths out market noise for cleaner trend signals, and it reduces lag, making entries more timely and precise, right? And it helps traders to avoid fake breakouts and false reversals. In as much as this indicator has all these benefits, it does not guarantee profit. Please take note of that, okay? So you not keep your expectations too high. The indicator is just an indicator, right? Although it has some benefits, but it is not foolproof, okay? So now, by focusing only on reliable momentum shifts, this indicator actually allows traders to enter trades with more confidence, okay? You can use this indicator to identify confirmed trends, to avoid trading in choppy markets, and to also confirm signals from other indicators. Now let's just quickly talk about identifying confirmed trends. You should only enter when oscillator shows a strong shift. Let's analyze the functionality of this indicator together, right? Now you can see that there is a red zone and there is a green zone. What does that mean? When the indicator line gets into the red zone, obviously, what do you think? A sell move is incoming, right? That's what you think, and that's the correct thing. And then when the indicator enters the green zone, it means that a buy move is incoming, right? So basically, you should be watching out for the price entering the red zone for a sell and the price entering the indicator line. The indicator line entering the red zone for a sell and the indicator line entering the green zone for a buy. And please use this indicator in the trending market, okay, for more accuracy, okay? And then you should only focus on entering trades in the direction of the trend. For example, you can see that this is a sell trend, right? We had a rejection here, lower high, and so on. So now, once we have a lower high, you have gotten a confirmation for a sell, and then the indicator has entered the overbought territory, the red zone, and started coming down. It's a sign to enter a sell. So just look for a confirmation candle, bearish confirmation candle. For example, we can see that we had a double top formation. Double top is a chart pattern. Remember, double top is It's a bearish chart pattern. So we had a bearish chart pattern here. So that validated our entry. So we could have considered entering a sell after we got a confirmation, and then stop loss can be above the swing high, some pips above it. Take profit can be at support levels. Okay, now that is for a sell. Make sure you enter sell trades in a sell trend. Then for a buy trade, identify a buy trend first, buy trend first of all. Make sure a buy trend, a bullish trend has been identified first of all, and then you watch out for the indicator line to drop into the oversold territory, the green zone. So once it enters the green zone, then you look out for bullish candlestick patterns or chart patterns. Okay, so for example, you can see that we had a bullish engulfing around here. So right after this bullish engulfing, that was a confirmation for a buy, right? So you just look for a good opportunity, enter your buy trade. You can set your stop loss some pips below the support, and then your take profit can actually be at key resistance zones. All right, just make sure that it's at key resistance zone, right? All right. So using this indicator is quite straightforward. The signals are clear. Okay, just have to watch out for the lines entering the overbought and entering the oversold. The red zone, the green zone, and all of that. Okay. So when the indicator line is above the zero level, it shows bullish momentum, and as you can see, it's going to be painted green, showing bullish momentum. Then when it enters the red zone is when you will now be looking for sell opportunities. But when the indicator is below the zero level, painted red, it shows bearish momentum. But when it enters the green zone is when you will now start looking for buy opportunities. Okay, so it's quite straightforward, a very easy indicator to use. All right. Now, always ensure you observe good risk management. Do not trade an amount that you cannot afford to lose. Ensure that you always use good risk to reward ratios. For example, you can see here the risk to reward ratio is 2.53. Make sure that you are not risking more than 2% of your account balance in a single trade. Okay, that is not advisable. All right. Now, the regularized moving average oscillator is a must-have trend indicator for traders who want to eliminate false signals and improve accuracy. By reducing market noise and lag, it ensures you only trade real trends rather than reacting to random fluctuations. Okay? So if you found this useful, make sure to like the video, subscribe to the channel, and turn on notifications for more expert trading insights. All right. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.